Good morning, everyone. Welcome back to the commodities update video. And today we'll be looking at natural gas and the tradable ticker UNG, as well as oil, the US dollar, gold, and silver. We'll be looking at their technical analysis, as well as the most likely scenario price will be heading into later next week. And we'll take a look to see some of the clues that we can potentially look at and to see where price would potentially reverse or head lower for a lot of these stocks and commodities. And if you guys learn anything, feel free to like, share, and subscribe. They're always appreciated. And let's get started. So natural gas on and last week. So I was talking about the 8-hour EMA 12 as a strong level of support because it was a strong level of resistance prior. You can see this teal looking line. You can type in exponential movement average and type in the 12. You get the same line as me. So you can see we're acting as support here on the way down. Pretty much the perfect bounce, perfect rejection here. And you can see once we broke above that over here and finally decides to break above this 2.45 resistance, you can see ever since then, it's been acting as support perfectly on the way up as well on the 8-hour time frame. And we gapped down overnight here on the Sunday. And essentially after that, you can see now it's acting as resistance again. So our EMA 12 has been pretty perfect resistance levels to play off of. Very simple, keeping things simple here. And see, once we've broken through that, now it's acting as resistance. And we came down, back tested it twice. You can see over here on the hour time frame, back tested it here once. And then we're here again, try to break above it, didn't happen, double top, rejected from there again. You can see when this rejected from there, you can see the follow through from the bears. So what are we looking at now here? As long as the 8-hour EMA 12 is above us, and if it continues to reject, let's say we bounce on Monday, and this would likely catch up. And then we go a little bit sideways, and then let's say we touch it again, and this didn't get over it, we're likely going to head lower. So we'll see about that. We also closed pretty much at the low of this day. That just means that we ran out of time to take things lower. We could have probably went a little bit slightly lower as well. My guess is we need to hold 2.45, this level of prior resistance. We want to see it act as support. If we do bounce from there and break above the EMA 12 on the 8 hours, then we're likely looking at a big equilibrium on the daily charts. So we go to the daily chart. Equilibrium means a big move down, a big move up, and the next move is going to be within the prior move. So this drop, if we do bounce from there and break above the EMA 12, is going to be within this move up. So, and then the next bounce is likely going to be within this drop. So it just gets tighter and tighter. Obviously, it doesn't always go like that perfectly, but you guys get the idea of an equilibrium. It starts to tighten up. And yeah, that's a huge headache for anybody trading this unless you are getting in and getting out. And if you're just holding, it's one of those nightmares where you just swings and tighten up. Advantage of the moves up and downs with the AR EMA 12s. Obviously, we won't try to nail bottoms and tops, but if you just got in here, right, on your short, and hold it to once it breaks above, you don't need the entire move, but you got a pretty good chunk here. A 21% move, right? And if you waited for confirmation, right, you missed this from this bottom to all the way over here, right? This move here, you missed 15% of the bounce, but you still got in long after the 8-hour EMA 12 bounced over here and broke above resistance. You would have still made an extra 30%, right? So we're not trying to nail bottoms or tops here. But even if you missed the initial move, 15% of the move, you still got 30%. Same thing over here. You missed the top here to the drop. That's a 9% move that you missed. But that's what you're getting here on the short, right? The rejection from AR EMA 12, you still made 17%. Or if you just missed that whole move, you get in here from the first rejection, right? That's still a 15% move, right? From this back test. Big drop. Where's my big drop? Back test. Getting short here. Still me 17%. Let's take a see if bulls can show up at 2.45. And if your chart looks different than mine, make sure to click the adjusted for contract. See, you would have looked like this if you didn't click adjusted for contracts. So make sure you click that. And for the chart, you look at like mine. And yeah, let's see if bulls can bounce here. And we pretty much went from daily overbought straight to daily oversold. So that is a huge drop. And we will get a bounce here when we hit that 2.45 here. The dollar support underneath that, just this level here. UNG. So UNG follows exactly as with natural gas. And we're likely going to form that equilibrium as well. You can see big move down, big move up, huge move down, likely tighten up as well. So if natural gas holds at 2.44 level, 2.45 level, UNG will likely hold this $5 range as well here. So maybe we get a one more day down, holds that level, we'll get a bounce, and then we'll see if it can get over that 8-hour EMA 12 on the natural gas. Then we'll likely get a bounce over here as well. And yeah, we'll see how it ends up out. And now, zero signs of reversal yet. We don't even have the 5-minute uptrend, right? You see, even on the 5-minute, the smallest time frame, we're pretty much just close to the low of his day. So no signs of reversal yet. We need an hourly trend change for the very least. Get a bounce, set a pivot, see if we can get an hourly uptrend going for us to even call this the bottom. Yeah, so let's see if we get this bounce, hit that $5 range, get an hourly trend change. We can hit that equilibrium on the daily chart it might be forming. So now, bears are in full control. All right, let's take a look at oil. Oil here is not doing much. So the daily, see if anything. Nope, it's just going sideways completely and still in this tightening range. Sideways, absolutely just nothing. And as long as it stays in this range, we know where it's going to be trading. And we'll see once it breaks out, then we'll have a better understanding of which way it's going to go. On the weekly chart, it looks like it just bear flagging. So let's see here, from top of the move to the bottom of the move. Yeah, we pretty much bounced. So the counter move pretty much bounced to the 38.2% mark, the 0.382 mark, which is the bear flag territory. As long as we don't get above the 0.382, it's still a weekly bear flag. So right now it looks like it's just bear flagging on the weekly. The chop around here. And if we break above here, then that's a negated weekly bear flag. If we break below that, then that's a confirmed weekly bear flag. See, it decides, and you can see the 8-hour, sorry, not the 8-hour, the weekly EMA 12, the teal looking line is acting as perfect resistance. Rejection here, rejection here, rejection here, rejection here. So yeah, so bulls need to get above that, the weekly EMA 12, as well as negating the bear flag, and bears want to continue to see it acting as resistance and then flush lower to a confirming a bear flag. All right, let's take a look at the US dollar. So the US dollar on the daily confirmed a daily uptrend for the first time here in a long time. So ever since this daily downtrend confirmed here, we had been trending down, and now we are from our very first daily uptrend. So that's a good time for dollar bulls. And this is looking a little bit like, see on the weekly, looking like a little bit like an inverse head and shoulders might be forming up. This is the left shoulder. This is the head. And potentially, if we start to reject from this level, we may form a right shoulder. And that it's a bullish pattern. So let's see if we can break above that, the neckline here. Then that's a confirmed inverse head and shoulders. But that would take a few other more weeks because these are weekly candles. See if that forms up. And that would be a headwind for the stock market if the dollar continues to go up. And excuse me, still a little bit under the weather here. Yeah. So let's see if the dollar gets above this 103 mark at this level. If it does, then I'm looking at it potentially hitting this maroon looking line, which is at 103.8, which is acting as support, 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 support. Now it will act as resistance because we're under it. And that also inverted of the inverse head and shoulders. We come out all the way up here and get that small retracement, maybe come back to this 103 and then bounce from there and then break above it. That will be an inverse head and shoulders play. And will be a headwind for the metals. That'll be gold and silver, as well as the stock market. And gold is just tightening up, doing its thing. So not much going on here. I think we talked about this last week, where it's forming equilibrium. Big move down, big move up. Moves are always within the prior move. And you can see this triangle here. It's about to break out of this triangle very soon. We don't know if it's going to bear bull side. If we take a look at the dollar, let's say it bounces for one more day, come up here. Then let's say gold bounces up to this, its black looking trend line. And then it starts to form its inverse head and shoulders. We pull back for, I don't know, let's say 3-4 days. This could potentially break out and hit this level. And then when it reverses, we likely come back down here again. So which way it goes very soon. Pattern, and gold will likely break out of this tiny range soon. Silver, let's take a look. Silver is a lot more volatile. Same thing, forming a tiny range with gold. Big move up, big move down, big move up. Gets within the prior move. Starting to, actually this looks more like a falling wedge. Let's see. So it's tightening up as well. And we're waiting for the dollar to break. So if the dollar breaks, bull breaks, then this is going to be a failed bear break as well. Wedge. So also close to the end of its pattern. Same thing as gold. So we'll see which way it breaks very soon. We're probably going to come down to test this 22.2 level. You can see I can support, 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 support. Higher resistance. Now I can support. So when we come down to here, which is also coinciding with the falling wedge support at the same time with this 22.2 range. So we'll see if it bounces from here. A lot of tightening up on the metals, and it's going to break very soon, probably next week. Same thing, gold and silver. And the key is going to be the dollar. So we'll see if it hits and if it does, we're likely going to come back up and retest this 104 range. You can see strong resistance here, resistance, resistance. So if that happens, metals or likely bear break. Resistance. Yeah. So we'll see how it goes. All right. If you guys have any questions, feel free to comment below, and feel free to support the Patreon. It's on the link below as well. And if you guys need any one-on-one coaching, it's also on the Patreon page. And have a great rest of you guys' weekend, and I will see you guys next week.